makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning with the conversations that matter. Here's what's coming up on today's programme. European stocks are lifted by China's latest stimulus measures, and wages US interest rates may be approaching a peak. Italy's Deputy Prime Minister tells Bloomberg the country may look to hasten the sale of Monte dei Paschi amid Rome's proposed move to offload some of its holdings. Plus, Ukrainian President Volodymyr Zelensky overhauls his wartime cabinet by removing his defence chief. We will hear from Zelensky's chief diplomatic advisor later this hour. Welcome to the programme, everybody. I'm Anna, in for Francine this morning. Let's have a quick look at where we are across these European equity markets. So the European stocks market is going in alone in the sense that is without the US, so will be alone as we go through the trading day, of course, with Asia for the start of things. And the handover from Asia has been pretty positive. You can see European equity markets then moving higher this morning, up by 0.6% on the FTSE 100, the CAC and the DAX, also making decent gains today. A couple of drivers of sentiment. One of them is the property sector over in China, and the other is expectations for a Fed pause. Both of those really hangovers from last week, and we've seen some really interesting evidence of success at stimulating demand for housing in the Chinese market. So we'll get a briefing on that in just a moment. Let's have a look at some other assets for you just to get a broader take on where we are across markets. So this is the Stocks Europe 600, then up by 0.7%. Basic Resources going a little bit higher, incidentally, on the back of that better news out of China. S&P futures, we put them in here because they are still trading, but of course no cash trade today because it's Labour Day. So enjoy your day off if you are over in the United States and not working today. This is the Brent crude price. It is at 88 with an 88 handle, 88.68. We've heard from Russia, of course, and we know that they are going to be continuing their production cuts and dialing down production. We're waiting to hear from Saudi Arabia as to whether they will extend those production cuts into October. The expectation is that they will. And so with that expectation, that has been driving the price of oil a little bit higher. Country Garden, this has been a mover over in the Chinese session. That stock considerably higher. There you go. We've got other Chinese property stocks for you as well. So Country Garden, Evergrande and others all moving higher. Let's get to the source of that positivity around Chinese property today. So Chinese property stocks surging earlier as the nation rolled out further support measures, including lower down payments for home buyers and looser mortgage rules in major cities. Joining us now for more on this is Bloomberg's Kevin Kingsbury, who is over in Hong Kong for us. Kevin, very good to have you with us. So what exactly is outlined in these measures? Because we heard about this last week, didn't we? But it's taken through the weekend, I suppose, we've seen some concrete evidence that these measures can have a real impact.
Right. Well, first, Anna, this is really a two-day rally because Hong Kong stocks here were closed on Friday because of the typhoon. So we've had gains today that measure just the mortgage moves that were announced late last week about cutting down payment requirements. And like you mentioned, also some initial signs that both new home and existing home sales have surged over the weekend down to the back of these mortgage announcements.
OK, and that's part of it, the fact that we saw the reduced down payments required in certain Chinese cities, and that's having a visible impact. We've also had some better news out of Country Garden. It had become the latest poster child for troubles in the property sector.
Yes.
And this particular developer has just days to avoid a default on a dollar bond, but it has managed to pay one of its other due bonds. What are we hearing? What's the latest to play out here?
Like you said, we have this ringgit bond that was wired money over the weekend. Country Garden also got a yuan bond extended for over 3 years. So it's got these ability to kind of stretch out these payments. And then we also have these $2 bonds that are due later this week. Now, because of the moves we've seen over the weekend, the chances are they're going to pay these bonds over the next few days. And then there's nearly $2 billion worth of bond obligations for the rest of the year from Country Garden. So while there's some good news here over the weekend and potentially later this week, there's still much more to go as far as them being able to kind of climb this debt wall that they're facing.
OK, so we continue to watch the ability of that business to pay what it owes. What about what the leadership in China is saying? She's speaking over the weekend, I understand, vowing to open up markets. What exactly does that mean?
It's a good question because we've heard this vow year in and year out from the same gathering that he made these announcements with over the weekend. One analyst put it as promise fatigue. Are we kind of at that point where we hear all these words from government officials from Xi on down, and where's the kind of the follow through? Now, obviously, here with the mortgages, we've actually had some concrete moves that have been announced in recent days. markets, investors, they really want to see more action, more kind of steps to really get this economy going again, because after the GDP forecast that was announced, the latest readings, there's just uncertainty as to where exactly is this economy going, and does the government have the stimulus measures in place to kind of really get the 5% or so growth that the country's been targeting for so long, kind of get back to those levels.
Kevin, thanks for the briefing. Bloomberg's Kevin Kingsbury in Hong Kong with the latest on the property sector and other moves in China. Now, the August payrolls data came in bang on target, and the softer tone in recent data has helped the Treasury bond market to rally. Joining us now for more on this, the data and the wider market moves, Bloomberg's Sam Unstead with us from the Markets Today blog. Very good to have you with us, Sam. So the latest US jobs report then signalling, well, on the one hand, solid hiring data, but slower wage growth. Does that give the Fed enough sort of wiggle room to pause? Is that where we're looking?
So I think overall, it's almost exactly what markets were looking for, right? So jobs did beat, but there were downward revisions for the previous month, so that kind of cancels that area out. Wage growth is cooling, unemployment's ticked a bit higher, more people coming back in, and everything else is sort of cooling, but not too much. So it's a kind of controlled cool down in the economy, and I think that's exactly what people have been looking for as the monetary policy transmits through, and it's not having the kind of damaging effects that maybe people had initially thought could.
And if you are seeing the economy cooling, you might be expecting yields to stay where they are, or perhaps to move a little bit lower, given the recent rally we've seen there. And with that in mind, I see that BlackRock's Rosenberg says that 2-year notes are, quote, a screaming buy, which is pretty eye-catching language to use, isn't it? Does this signal this maybe signals that they think this is the end of the Fed hiking cycle? I
think there seems to be a growing consensus that, at least for now, and certainly for the next meeting, that there is space now to pause. I think what may now be being looked for is a kind of very light hawkish hold, if you like. So yes, a pause now, but then leaving the option open that if things do heat up again, or things start to the data that the central banks are so dependent on right now, if that starts to go in the wrong direction, that there is room to shift policy again. OK.
Sam, thanks very much for joining us. Sam Unstead with us there from the Markets Today team with some focus on the factors that are moving thinking around bond markets. Coming up, Italy's governing coalition is fighting over plans to sell a stake in Monte dei Paschi, the world's oldest bank, as it tries to bolster public finances. More on that story next. This is Bloomberg. Welcome back. This is The Pulse. I'm Anna Edwards, in for Francine Lacqua this morning. Let me just give you a quick update on what's going on in the markets. The Stoxx 600 is up by 0.7%. The FTSE 100 up by 0.6%. The CAC Iran up 7 cents. So we're making decent gains, really, across European equity markets this morning. We are waiting for, we won't be joined by the United States a little bit later. We're not going to get them into trading because, of course, it's Labour Day, so that's not going to happen. But we are going it alone in the afternoon part of the European trading day. But European equity markets are a little bit firmer this morning. The combined push of better sentiment coming through from China and also the US session, the data that we saw there, and Fed expectations. Let's turn to China now in terms of security concerns. Huawei, China's top chip maker, have built an advanced processor to power its latest smartphone. It's a sign that Beijing is making early progress in a nationwide push to overcome US sanctions. Huawei has been at the center of intensifying US trade curbs on Chinese businesses, which Washington says are based on national security concerns. Let's speak now to Bloomberg's Peter Elstrom, who has details here. So, Peter, strip this story down for us if you could. Bloomberg worked with a specialist research firm on this to take apart this new smartphone from Huawei. What did the investigators find?
That's right. So Huawei quietly dropped this phone last week into the market, and it caused quite a stir. It's an advanced phone. It's called the Mate 60. But there were a lot of questions about exactly what kind of technology was inside the phone. Huawei had to back out of the smartphone market because it didn't have access to the most advanced chips, the kind that would power, say, the iPhone. for example. So it wasn't clear exactly where it got these chips or how it got these chips. Unlike most technology companies that love to talk about specs, Huawei didn't say anything about the specs here, especially the key ones. So what we did is we bought one of the phones, and then we worked with this firm, Tech Insights, which does breakdowns, teardowns of products professionally. And they looked at the components inside the phone. And what they found was very, very interesting. They found that there is an advanced semiconductor inside the phone that's made by SMIC. That's a Chinese chip-making company that's not known to have these kinds of capabilities. They were able to make the phone at what's called 7-nanometer technology, which is quite advanced. And in that case, they were able to produce a processor that was much more advanced than people had anticipated SMIC was actually capable of doing. So it's a sign of China's progress in getting around some of these U.S. restrictions on the kind of technology it has access to, particularly for a company like Huawei, which is blacklisted by the U.S. government.
Yes, I was going to ask, so why does the speed of the chips inside this Huawei phone, why does it matter? And you've given us a bit on that already. It signifies then that China is moving faster than the rest of the world had anticipated in moving to these faster chips. Is that the basics of the story?
That's right. That's right. The U.S., you'll recall that last year the Biden administration imposed export controls on China. And it was trying to draw a line in the sand where China would not have access to chips that were more sophisticated than 14 nanometer, which is about 7 years beyond the latest cutting edge technology. And now China has shown that actually internally in China, it can make these 7-nanometer chips, which are only about 5 years behind the latest technology. So it's a step forward. There's much that we don't know about this chip. We don't know what kind of volumes Huawei and SMIC can make together of these chips. We don't know whether they can make them at a cost that's competitive on a global market. But it is a sign that they're able to make some progress in this area that's been so contentious, and is something where the U.S. has tried to limit their ability to kind of delve into these kinds of technologies in the future.
Yeah, and really interesting, Peter, that they dropped this phone so quietly then, given the obvious interest in that subject. So will this affect the geopolitical clash then between Beijing and Washington? If Beijing is moving faster on its own than anticipated, does that limit the effectiveness of the Washington sanctions?
Well, it certainly is going to get the attention of the U.S., the Biden administration, and particularly the Commerce Department, which has been at the forefront of trying to impose these restrictions. It's a sign that the sanctions that they have in place right now may not be as effective as they thought they had been in the past. It seems like they are making some progress here. Inside of China, state media picked this up right away, and they kind of trumpeted the accomplishments. I think they're trying to show that they feel like they can make progress in technology, and semiconductors in particular, even without the support of the United States or even with these U.S. sanctions, which are very, very severe.
Peter, thanks so much. Bloomberg's Peter Elstrom in Tokyo with the latest on these Huawei developments. Coming up on the programme, we'll take a look at what's driving the rental market across Europe, what unites it, what differences do we find. A big Bloomberg deep dive into rental markets in Europe. This is Bloomberg.
My party is in favor of privatization, not only the Monte Paschi Bank, is for have more money for the state in our budget. We need to work in this direction. The debate is open. We need to decide in which sector we need to achieve these results.
So which ones are you looking at? Monte Paschi and what else?
That there are a lot of state building, former barrack. It's possible to work in this construction sector and for having more money, but we need to decide also the services. My idea, my idea of my party is to privatize the services in the ports, for example, but also to privatize the services in the local level.
Minister, when you say that you want to accelerate the sale of Monte Paschi, how quickly could that happen?
We will decide, I think, in short term on this. This is a job of the Minister for Economy. We propose, I think, in short term, 2 or 3 ideas, and we will decide in short term. I think This is we need to do it because for me, we need less state and more companies in the economy. I am liberal. For me, it's crucial. Also, for attracting new investment from abroad, we need to organize a revolution for the liberalization, reform on fiscal reform, on justice reform, civil justice reform, less bureaucracy, less bureaucracy, because there are a lot of money, also Italian money in the banks. If we want to involve the private sector, we need to organize this revolution in favor of reforms.
That was Italy's Deputy Prime Minister and Foreign Minister Antonio Tajani speaking with Bloomberg's Francine Lacqua, talking about how the government should accelerate efforts to sell a controlling stake in the Italian bank Monte dei Paschi. Well, Tajani's comments to Bloomberg at the Ambrosetti Forum have stirred some controversy. They've put him on a collision course with other members of Prime Minister Giorgia Meloni's ruling coalition who've been critical of attempts to accelerate the sale of the world's oldest bank. Joining us now is Bloomberg's Milan Bureau Chief Tommaso Ebhardt, who can help us pick this story apart. So why is Italy then discussing the sale of their stake in Monte dei Paschi and other assets, Tommaso?
Sì, buongiorno again from Milano. So the answer is quite clear. Italy needs cash. The economy is doing worse than expected. The government led by Prime Minister Giorgia Meloni has already made some plans to invest state money. For example, they announced the acquisition of a 20% stake in the Telecom Italia network. They think it's very important for the Italian economy, so they have to find space for it. And that's why they are discussing the sale of several assets, including Monte dei Paschi di Siena. These words by Antonio Tajani are having an impact on the market. The shares of the world's oldest bank are now falling in Milan, because analysts are worried that Italy will accelerate the sale of Monte dei Paschi without finding a strategic partner, and this means they could eventually even sell a stake on the market. This is what analysts are saying this morning, and this is why we are seeing now the shares going down.
So this is what analysts are saying. Why is Meloni's government then in disagreement? It seems different parts of the coalition think differently on whether there should be the sale of this asset, the world's oldest bank. Why do they differ in their views?
So Italy has to sell Monte dei Paschi by the end of 2024. The question is doing it now or doing it later. Quite interesting, Tajani came as a surprise, saying we need to do it right now. We want less state into the economy. We have seen under Meloni that the Italian government want to have more, a bigger presence in the economy. So there is a big difference here. And the League, who is very close now to the Monte dei Paschi dossier, is saying, you know, don't rush. We need to find, you know, the right solution. This is why there was such a stir. There was such a stir in Chernobyl after Tajani's comments.
OK, yes, quite a lot of fallout then from his comments. Thanks, Tommaso. Thanks for the update. Bloomberg's Milan Bureau Chief Tommaso Ebhardt with the latest on Italy and its finances. A crisis is brewing in the European rental market, and it's also a major political issue. Bloomberg's Alice Cantor explains.
Across Europe, a crisis is brewing, one that is set to snowball and become a major political issue, and one that threatens the roof over your head. The price of rent has shot up across cities in Europe, but what's behind this? At its core, it comes down to one of the most fundamental concepts in economics, a mismatch between supply and demand. That's whipped the market into a frenzy. Too many renters chasing a dwindling stock of properties, with the poorest bearing the brunt. On the demand side, a major factor is migration. More people than ever are being crammed into Europe's biggest cities, driving up the demand for rental properties. Brexit, the war in Ukraine, and the unraveling of COVID restrictions are all factors causing more people to move. Higher mortgage rates have also caused the demand for rental properties to rise as home ownership becomes more unaffordable. On the supply side, landlords facing higher mortgages have opted to sell up, chipping away at the rental stock and worsening the crisis. So why not just build more houses? Well, that's easier said than done. High inflation has driven up the cost of materials, hampering construction as home builders feel the pinch. In Europe, these factors are multiplied because of the number of historic and low-rise buildings, and cities tend to be relatively small compared to US cities. It's a combination of factors which is turning up the heat on the rental market in Europe. It threatens to exacerbate inequality and has already begun to stoke political tensions, including in Lisbon. It's a perfect storm for the rental market, and it shows no signs of abating.
Bloomberg's Alice Cantor reporting on the rental market in Europe. Let's have a quick check on what we see in markets this morning. And we have European equity markets in positive mood this morning, up by 0.9%. The FTSE up by 0.8%, as is the CAC 40. The Xetra DAX not very far behind. And in terms of the sector breakdown, basic resources, the best performing sector, but technology, consumer products and services also trading higher. In fact, no sectors are in negative territory today on European stocks. We're being pushed higher by better sentiment coming through from China and the China market reaction to housing sales data over the weekend, but also around Fed expectations. So those are the explaining factors, I suppose. Coming up on the programme, we'll talk about Ukraine, change in terms of who's the defence ministry. This is Bloomberg. Welcome back to The Pulse. I'm Anna Edwards in for Francine Lacqua this morning. Let's get to your top stories. European stocks are lifted by China's latest stimulus measures, and wages US interest rates may be approaching a peak. Italy's Deputy Prime Minister tells Bloomberg the country may look to hasten the sale of Monte dei Paschi amid Rome's proposed move to offload some of its holdings. Plus, Ukrainian President Volodymyr Zelensky overhauls his wartime cabinet by removing his defense chief. We will hear from Zelensky's chief diplomatic advisor shortly. Good morning. Welcome to The Pulse. I'm Anna Edwards in London. Now, SoftBank, the business that they have backed, of course, for many years, Arm, kicks off its roadshow this week, and the company is expected to list its shares publicly this month. The IPO could be the largest in the tech sector since Alibaba, but it could mean the appetite for public, or could it mean the appetite for public listings is back? Sonali Basak reports.
The IPO freeze is starting to thaw. Japanese giant SoftBank is looking to list its giant chip designer, Arm, in what's meant to be one of the biggest U.S. tech listings in history.
It would be the biggest U.S. tech listing since Rivian, which raised almost $14 billion in 2021.
IPO deals picked up steam from 2019 to 2020 and then peaked in 2021 at a whopping $338 billion raised for fresh stock sales, with more than 1,000 companies going public. But when the Federal Reserve started to raise interest rates, new listings fell off a cliff. With only roughly $14 billion raised through August of 2023, the market stood at the lowest since 2009. Venture capital investors, from Andreessen Horowitz to Tiger Global, are hungrily looking to cash out on some early wagers, while private equity-backed firms like Birkenstock are also seeking to change control. Arm is no different. SoftBank has owned it since 2016 and is ready to start finding a way to start exiting the investment. The valuation for Arm in its IPO is slated to be a large jump from the $32 billion it stood at 7 years earlier. But through the market doldrums, some of the IPO hopefuls have already lowered their valuations.
Grocery delivery company Instacart slashed their $39 billion valuation to $10 billion late last year.
There's a silver lining to those valuation drop-offs. It means that when the companies finally do hit public markets, investors can buy in at a lower price tag. However, their worry is still that 2023 and 2024 could bring more market volatility ahead, and that perhaps they've still bought in at too high a price.
That was Sonali Basak reporting there on appetite for IPOs. Let's turn to geopolitics. Ukraine's President Zelensky says he's removing his defense chief, Alexei Reznikov, after allegations of corruption in military procurement. This while Turkey's Erdogan meets with Russia's President Putin today to discuss a new grain deal. Joining us for more is Bloomberg's Europe correspondent Maria Tadeo. Maria.
Yes, Anna, good morning. And obviously, big news for Ukraine. You have this reshuffle that's going on at the defense ministry. The war, as we know, continues to go on. Ukraine says it is making, slower perhaps, but it is making progress. And of course, this week you have both the talks on the grain deal, but also the G20 summit that is coming up, where we know once again it will be a topic on the agenda. Ukraine, can they get a communique? It has been difficult over the past editions, but the Indian delegation that is hosting in this G20 hopes that they can lead and end with a communique. So to debrief all of this in a very busy week, we are joined from Ukraine by Igor Shovko, who is the diplomatic advisor to President Zelensky. And Mr. Shovko, obviously we've seen these changes going on at the defense ministry. I know that this is not something that you're directly involved with. This comes with the president himself. But I wonder if there's a message to the international audience that is seeing all of these headlines and all of this news, what it means when it comes to Ukraine, the war. And I know fundamentally there has been major drives from your government to be seen as being very tough on corruption. You need this for your credibility and your reforms. Does this stress that message that you've talked about for a year, that you're taking this seriously at government?
Look, Maria, thank you for having me. Minister Reznikov has done a very good job for a lot more than 500 days of the wartime. You see that Ukraine is now gaining the arms, it's gaining the support, it's gaining the ammunition. This was not happening, unfortunately, before the open aggression of Ukraine, and immediately after the open aggression of Russia to Ukraine. Only after several months, we started to receive in numerous amounts what we are receiving now, and that's what allows us to have made already several major counteroffensives, and now, we are having another very important counteroffensive, which is going on as it goes on. I mean, this is not a Hollywood movie. You cannot do it within one day. But very important, this is going on. So the president is making his decision. He is absolutely right. He's chief military commander of the country. So we are hoping that the tempo of the counteroffensive will be increasing, and definitely Ukraine needs to achieve very significant results in the near soon.
And Mr. Shovko, just to end on this subject, of course, a counteroffensive, the defense ministry is important for a lot of the contracts and supplies, but it really is the generals that handle the operation on the front line. Is this going to have any impact on the counteroffensive, do you believe? And I wonder, too, your foreign minister, Mr. Kuleba, last week, he was very open about what he believes is too much criticism, everyday commentary on how this counteroffensive is going on. And he said, again, it doesn't play on Twitter time, it's happening in real life, and critics will be proven wrong. Do you feel perhaps there's too much negativity about this counteroffensive?
Well, again, like you said in the beginning, I'm not directly involved in the planning of the counteroffensive. That's up to the military people and the generals you mentioned. I don't think there will be any significant changes in the relations on the military field, on the military field amongst the military commandment. Criticism is always at place. Ukraine is a democratic country, and you're a journalist yourself. You know how journalists like to go into any single detail to criticize, sometimes for the slow pace, sometimes that something is not happening. Let's leave the pieces and the particularity of the counteroffensive to the people, to the professionals. When the result will be in place, and the result will be definitely in place, we will be first to see and command and to commemorate the victory of Ukraine.
And Mr. Shovko, also going on this week, equally important is the Green Deal back at focus. Remember, you had agreed to this Green Deal with the United Nations. Turkey was also involved, and then Russia pulled out of it unilaterally a month ago. That deal now, for the time being, has been, broken. The hope is for it to be reinstated. I wonder, do you have hopes that President Erdogan can reinstate this deal? Have you had any talks with the Turkish delegations? Because they're the ones that are going to Russia with a message for Vladimir Putin, which is, again, to reinstate the deal.
Like you rightfully said, Ukraine has not withdrawn itself from the deal we are having with Turkey and the United Nations. And that's why we continue, we are trying to continue the existence of the grain deal. We are working on the alternative routes. And you might have seen in the news already that several vessels are already using this alternative route to further export Ukrainian agriculture products. At the same time, yes, we know about today's meeting, and several representatives of Turkey were in Kyiv a week before that, including the foreign minister, Hakan Fidan, who knows absolutely well the position of Ukraine. And yes, definitely, we count on the Turkey's position to support this grain deal. It is not only for Ukraine to have this grain deal. It is only for the also for the poorest country of Africa and Asia. We were exporting throughout the last year more than 30 million tons to these countries, and we are ready to do this. Again, the crops in Ukraine this year is quite good, so we are ready. We are ready to be a world's breadbasket. Even in terms of war, Ukraine is suffering from Russian aggression, and the world is suffering when Russia uses aggressive instruments in the food security area.
So just very briefly, you trust that the Turkish delegation can get to a breakthrough. That is your expectation based on your conversations with them.
We trust that Turkey will do everything possible and impossible on this regard.
Well, thanks for that. And that takes me now to the second part of this grain deal, because as you know, Mr. Shevko, you're also exporting, or we're exporting to a number of European countries. Then there was a restriction on the number of exports that you can get. This was led by a coalition of European Union countries, including Poland. Now, do you believe those restrictions will be extended over time? That would be detrimental to you? Are you having any conversations with the European Union about not extending it? What sense do you get, especially from the Polish, on this?
That's unfortunate development of events, right? You are our nearest partners, including Poland, were introducing these unilateral restrictions over Ukraine's trade. You remember several months ago. Now we have the decision, the resolution of the European Commission, which has to cease its existence exactly on the 15th of September this year. And we hear the position of President Ursula von der Leyen, which she communicated several times to my president, that after this period, these European Commission restrictions will not exist. We have to save the principles of free trade. Ukraine and the EU has the association agreement, and part of this association agreement and deep and comprehensive free trade area between Ukraine and European Union. So that's important to stick to the rule of the European Union. It's important to stick to the association agreement. Ukraine, again, in times of war, is producing and exporting and transiting its products. And we should live in the free market economy. This is the principle of the European Union.
And we'll see on September 15th, because that's around where that decision will be made, potentially restricting that grain or not. Mr. Shevko, just as a final question, however, we know that the G20 is happening this week. The Indian delegation that leads those talks, or the host, they say they hope there will be a communique about Ukraine. We know there has not been one because of some of the tensions at play at the G20. I have two brief questions for you. You travel with President Zelensky. Is it the case that President Zelensky will attend this G20? Is he considering to go? And then secondly, on the G20 aspect of this, you've said you need to reach out to global South countries. With Brazil, you still don't have your meeting. You've not talked to President Lula. Why is this becoming such an issue for you? Is there something that they don't understand about you? And is there something you don't understand about them?
Well, with President Lula, by the way, my president not only met during the Hiroshima summit in the broader meeting of the G7 plus Global South countries panel, and they talked, by the way, about the peace formula. The peace formula this is the platform where we involve in the Global South countries, not only Brazil you mentioned, but also India, Saudi Arabia, South Africa, and China. China was present at the last meeting of National Security Advisor in Jeddah. The G20 meeting is taking place. Ukraine is talking to the partners. We know that the Ukrainian case should be raised at this meeting. It's impossible now during the times of Russia's aggression against Ukraine just to talk about the issues of economy, geopolitics, not mentioning, not touching the subject of Ukraine. So I do hope that all the global powers which will be present at this meeting will not only talk about Ukraine, but will talk about possible instruments how to end Russia aggression in many areas. Once again, not only in food security, in environment, in energy. This is
but yes or no? But yes or no? President Zelensky may go. Is that something that you contemplate? If you
certainly, I will not reveal you future plans of President Zelensky. Sorry for that. It's a security issue.
Well, and of course, we'll have to wait to see at the end of the week. Mr. Shevko, thank you so much for joining us on Bloomberg TV on a very busy morning. We always appreciate you coming on the show. Thank you so much. Anna?
Maria, thank you very much to you as well. Maria Tadeo bringing us that interview, that important conversation around Ukraine. When we come back, we'll get back to the corporate news flow this morning. I'll be joined by the CEO of Moleskine, the maker of the iconic notebooks, as we ask, is the world still in love with pen and paper? This is Bloomberg. Welcome back to the programme. This is The Pulse. I'm Anna Edwards, in for Francine Lacqua this morning. Now, Moleskine made its name by reviving journal notebooks, which became a favourite within the creative world. Today, the challenge for the mid-sized Milanese company is to keep old customers and win new ones by promoting the value of handwriting on paper in tandem with digital devices. This weekend, the Moleskine Detour exhibition opens here in London at the Saatchi Gallery, I understand. I'm joined now by Daniela Riccardi, who is the Chief Executive of Moleskine. Daniela, nice to have you with us. Thanks for joining us. Talk to me about how you combine writing on paper and the digital world. How do you start to think about that?
I didn't start to think about that. I inherited this beautiful thing that is handwriting and sketching, is where the human capital is. In the 90s, a group of friends created the Moleskine brand as a hair of the Petit Carnet Noir used at the end of 19th century, the beginning of 19th century. And it keeps going. I mean, handwriting and sketching is the best way to transform idea into realities, to bring them to life. And people keep using it.
OK. I mean, there must be challenges, though, with new generations, younger generations, increasingly tech-savvy generations who see a lot of their life online and in the digital space. How do you keep it relevant?
You know, I try to be with consumers all the time. And I myself created a Gen Z board within Moleskine. So I have about 20 kids. Around 20 that come from university. Some are interns with us, some are already employed by us. And so they give me all the needed information and to make sure that Moleskine can stay relevant to that generation. And you know, when I visit university, I see students, about 20–30% of them still writes. And the most precious moments of their life, their thesis, it's all written on a Moleskine.
And so what do they still feel they want to do with pen and paper for these Gen Zs? Is it around art, or is it around diary keeping? Where do you find their appetite?
Both. I mean, journaling, as you know, is very popular in general, and particularly in the Gen Z. But also, I think they want to record the most important moments of their life. That's what all our clients do until they are 90s. And the Gen Z do it too. And they do it next to their digital device, and that's OK with us. We have a smart Moleskine where you can handwrite on paper, but immediately shows on a digital device. And you can just push a button, and it goes by email or by WhatsApp to your friends. So, I mean, it was born in the digital era, and it continues to be, I think, the best partner of a digital device.
OK, so some digital adaptation. You sit within a global economy, of course, that has been pushed around post the pandemic by a number of forces. One of those is inflation. How do you keep the cost of the raw materials that you need to use? How do you keep a lid on those costs? How do you keep those under control?
Of course, inflation is always, it creates problem for any company, a lot of attention to cash, to inventory. But I have to say, you know, we've been working with the same suppliers since the start of Moleskine. We are loyal to them, they're loyal to us. I think we have a privileged position, so thanks God we managed to keep, I mean, there was increase. We managed to increase, but I mean, our production and our supply has not been disrupted.
So it wasn't disrupted? So there was no issue with your supply chain?
No. I did some crazy things a couple of years ago. I mean, a year and a half ago, during holiday period, we realized that there were no containers. So for the first time ever, I sent Moleskine by plane. But I made sure our clients had it on the shelf.
OK, thanks so much for joining us. Really nice to check in with you, Daniela, this morning. Daniela Riccardi, Moleskine's CEO. Coming up on the programme, the race to dominate the global EV market heats up. We're live at the IAA car show in Munich. More on that shortly. This is Bloomberg. Welcome back to The Pulse. Let's go to the IAA Auto Show in Munich now, where European car makers are jostling with competitors from the US and increasingly from China for the edge in EVs. Bloomberg's Germany correspondent Oliver Crook is there. Ollie, good to get your summing up then of what we've heard so far. Some of these legacy German car makers do seem to be under significant pressure. What have you been hearing?
That's right, Anna. We're the battle of the BEVs, the battery electric vehicles here in Munich, where really the European car makers are really trying to bring forward all of these concept cars to give a vision of what the future of this company looks like for BMW, Renault, Opel, Mercedes, all having gone with these concept cars. But again, these are things that are a couple years away, right? And this going into this meeting, we had Tesla slashing prices into the weekend yet again, and then also, unveiling its new Model 3. So you're really kind of the pressure mounting and mounting and mounting here. And we spoke to the Mercedes CEO about this because the Tesla was cutting them also at the very top end. Mercedes generally insulated to this sort of thing, but I asked him how concerned he is about those cuts.
Our goal is value over volume. So we're not pushing volume. We're very, very careful about how we go to market, our go-to-market strategy. And as you can see from the results for the first 6 months of this year, that has been working quite well for us. We're focused on value for the customer. I don't think the customer expects from a Mercedes a little bit of a roller coaster ride, but something that you can depend on. So we will continue with the value over volume strategy.
And they're the Mercedes mantra, value over, pushing volume. And really the questions are going to be, Mercedes can push value, so can BMW. Can the mass automakers push volume in the same value in the same way, or do they really need to tear and fight for that mass market share?
Yeah, so a focus on market share and who wins that. You've also been speaking to the CEO of BMW. What did you learn there?
Yeah, so I've been chatting to him, and really what I asked him about was about the new competitors here in Europe, because it's not just the European car companies that are, of course, trying to sort of give their model of the future. Many of the Chinese companies are already there. They're years ahead in terms of EVs, and they're really presenting their models to the European audience for the first time. BYD toppled Volkswagen over in China, and now they're really trying to break into this market. So I asked the BMW CEO how he feels about the competition.
China has the largest car market in the world, and that there's an industry developing to supply that market, which at some point in time also goes on a global scale, just like we do. That is not a surprise. So let's embrace them, and let's try to have a fair and competition to build ever better products for our customers.
And so everybody's saying competition is good. I wonder if they'll feel that way when the factories start coming up here in Europe. Though, all that being said, Renault pushing back earlier, saying that the rumors of their demise has been greatly exaggerated.
Yeah, absolutely. Quoting Oscar Wilde an hour or so ago for us. Very nice, Oliver. Thank you very much. Bloomberg's Oliver Crook in Munich. Up next, Bloomberg continues to bring you the latest breaking news on markets. Yusuf Kamel Al-Din will join us from Dubai. European equity markets are pushing higher today. We are without the US. It's Labor Day over in New York. If you are there in the US and not working, then have a very good day. European equity markets up by 0.7%. This is Bloomberg.